Happy 4th of July weekend, everybody. This is week 27 in our trading journey, and it was a short week. The reason for that was on Thursday, the futures market ended early. It was a half a day, and that followed by another half a day on Friday. This week, please join me as I show you two trades. One where I hit my stop loss of 100 points, and the second trade is how I recovered from it. How's it going? It's Rocky, your full-time stay-at-home dad, trading futures for a living. Thank you for joining me in the journey this week. Give me some feedback because I am trying to grow my channel. I am putting a little more emphasis on being a content creator, so I want to thank those who have been following me the past few years. And before we get started, just a quick disclaimer. This is for informational and entertainment purposes only and should not be relied upon as a basis for investment decisions. Week 27 isn't a full week of trading because of 4th of July. If we look at the histogram, this is Monday. It's a full day. Tuesday is a full day as well. And so is Wednesday. And on Thursday, which is July 3rd, you can see that it was actually a half day. So it ended at 10 a.m. Pacific Coast. And then on Friday, which is what this volume is showing here, it was actually open for half day as well, up to 10 a.m. But you see that there's a lot less volume. So when you are trading the futures, it's important to see what the hours are like because it's a little different compared to the stock market hours. As I mentioned earlier, what I'm going to focus on this week are the two trades that I did take, where the first one I hit my stop loss, and then the second one is how I recovered. So these are the trades that I took. I did take Thursday and Friday off, which is great because in the past I used to take a trade every day and I wanted to enjoy my 4-day weekend. But what we want to focus on this week were the trades that I took on Monday. This is the hourly chart. So what we'll do is we will transition to the 5-minute chart to look at those trades. So these are the two trades here that I took on Monday. And the first one was a loss. We hit our stop loss. And I will draw some lines just to see what the trade was like. For the first trade here, the entry was 44,290. So we will draw a white line on where 44,290 is, which is right here. And I'll mark that up also just so it's a lot easier to see. So 44,290 is right there on the time base. And then the tick base will draw 44,290 as well. And it's right there. And we'll mark that up as well. And with this entry, so after entering a trade, I have an OCO that's triggered right away with a stop loss of about 100 points. So from 290, 100 points is 180, which is this line right here. So that's my stop loss on the time base. The tick base is this line right here. So that's our stop loss. And then our target is 125 points above what it is. So from my entry of 290 plus 120 points, that's 415, which is roughly right here. So we'll just draw 415 there and 415 in here as well. So what was a little tough with this trade is, let me show you. If you look at the high here, just look at this number. I'm going to put my mouse to what our peak was in the middle of that trade. So on this candle here, so 20 minutes into the trade, the high there was at 44,370. So normally what I do is once I hit the 100-point mark, which would have been 390, I normally place a trailing stop to adjust it. So from a static stop at 100 points, I change it to a trailing stop. But at that time, either I was distracted or I wasn't in front of the chart because I am the primary caregiver for a 10-month-old daughter. So I try to multitask, looking after her and trading at the same time. But what was painful about this trade is just seeing it go below my entry, go back up again, and then out of nowhere, this candle here, it just took it out. Looking at the tick base here, you can see for the past 5 days, the low was at 44,185, and that's where I was stopped out. So I was stopped out at 105 points, and bring the calculator here. 105 points times 5, because I was trading the YM. That was a loss of $525. So that was a tough pill to swallow, but it was within my system. So with my system, I know that I'm allowing myself a stop loss of 100 points. Something I did do right after that trade, which is something I've been trying to do more recently, is I then trade 2 times the contract on the next one. And it's just, I guess, my way of getting back that loss. It's not something I'd recommend. It's worked most of the time, but when it does go wrong, it is a disaster. But anyway, the second trade that I did enter here, I'll draw those lines again. You can see, because I just believed in the trade that I took, the trade theory of being bullish on that day. I entered with 2 contracts, 2 YM at 44,270. So I will draw where 44,270 is, which is fairly close to the initial entry of 290 we had previously. So I will draw that for line there. Let's use the same colors so it's easier to follow. So 44,270 is right there. And then we'll do that on the tick base as well. So 44,270 is there. And I'll mark that up so it's easier to see. 44,270. So that's 2 contracts. And it's the same thing. It's I even though I've increased the contracts, I still have the same stop loss of 100 points. So that's roughly right here at 170. Not quite that one. So on the tick base, 44,170 is right here. And then on the time base, 44,170 is right there. And then our target is 125 points. So from 44,270 plus 125, that's 395. So 44,395 is roughly right here. Actually, let's not cross out the actual exit that we had. And 44,395 on this one is right here. So I'd be lying to you if I say I wasn't nervous with this trade, because just looking at this time base here, you can see this section right here. I was pretty much underwater. So that was a worrisome period. But as I mentioned, I believed in my trade theory. And thankfully with this trade, it kept going up. So with this trade, I had an alert at 100 points above. So from 270, once it hit 370, I put in my trailing stop, and from that trailing stop, we were stopped out at 44,348. All right, so let's calculate how we did on this recovery trade here. Our exit of 44,348, our entry of 44,270. There's a total of 78 points. But since we traded 2 contracts, each point is actually $10. So that was $780. So subtracting the loss of 525 points from the previous one, managed to still get a net of 255. So this is how I've been managing my losses recently. I try to enter not on an emotional sense, but I try to enter when the signs are there for a usual entry. The only difference is I am increasing the number of contracts. So this is how I'm keeping track of my performance. I know I could pay for an application that could make this a lot easier, but I like Excel, so this is how I keep track of it. For the week, we were able to get $760, which is not bad for the week. Year to date, we are at $1,379.56. So I am pushing for a strong second half of the year. What I'm aiming for is pretty much to replace what my engineering salary used to be. And here is the chart that I post on a lot of the social media. Just visually, it's a lot easier for me to see. You've seen that my year has been up and down, and I'm trying to build on this profit here, and I am confident that we will do well as long as I stick to my system. Because as I told someone that I chat with on YouTube, Preston, shout out, I always appreciate your comment. I told him that if you lost a trade, but it was within your system, to me, that's not a loss. To me, that's still a win. And that's a type of discipline that I've been doing a lot better on this past few weeks, and hopefully I can continue it and avoid any tilts. Thank you for tuning in. I hope you and your family had a great holiday weekend, and I'll see y'all on the next one. And just a PSA for next week, there's a lot of tariff talks that's gonna occur, so be careful out there. I'm saying that out loud because I'm also telling myself to be careful. All right, have a good one. I'll see you on the next one.